So I'd like to welcome Simon today. So Simon, I'm giving Simon a mentoring call, and this is my first time mentoring Simon. So welcome Simon to this session. So I just thought I'd record it as well, because it might be that other people might want to watch this and get some value from it. So first of all, would you like to just introduce us, say a bit about well, for example, which sort of location you operate in, and also about your experience in property?
Right, Keith, thank you so much for giving me this opportunity to talk to you. I'm very grateful. Thank you very much. As you mentioned, I'm Simon, and I've been in the UK property industry for the last 11 years. I'm based in London, and what I do, actually, my background is mortgages. That's what I used to do. I used to provide, somebody comes to you and they need, they found their dream home, and so they come to you to have the mortgage, the finances sorted out. So it was my job to find the best mortgage product for them, and so that the monthly payments are affordable and they've got a good interest rate, as well as having life cover, income protection in case of any emergencies. So that is my background, so to speak. But at the moment, I'm into property sales. It's something I'm very passionate about because it gives me a lot of satisfaction in the sense that somebody comes to you, again, they want to get that dream home, or they want to start a new business, so they need a commercial mortgage or finance to buy a shop, rent a shop. So it gives me a lot of satisfaction when, at the end of the day, I manage to find the property, or I arrange a mortgage for them, and they move into their dream property, and it just makes me feel that I've done something useful, for a day or in my life. So, in a nutshell, that's my background. And one other thing as well is that I've written some books, two books about properties, or should I say real estate in UK. It's got some basic information, like what is a mortgage. They're like dummy books, but I thought that it could be useful for people who want to go into first-time buyers, for instance, who want to buy a property in UK, or even people who want to go into property investment. So I am very happy in this industry, and I'm very passionate about it. I like properties myself, and I like being, helpful to people to get on the property ladder and also make some money in the property industry. So in a nutshell, that's me. That's my background.
Okay, that sounds good. So do you already have a property portfolio, or are you just starting out?
I'm just starting out myself. I used to have a property or two, but for one reason or another, I had to sell up. But I'm starting out right now, and I'm glad that I can use your services, Keith. Because as much as I know about mortgages and property sales and stuff, you've been there, you've done it all, and so when it comes to investing in properties in a smart way, something that I didn't do in the first place, but as it comes to building a property portfolio, strategically, you are the man. So I'm just glad that I'm joining you, and I can't wait to get cracking.
Okay, that sounds good. So and did you have like a sort of money to use as deposit, or are you trying to do this without using any of your own funds and trying to look using other people's money and so on?
Ideally, it would be nice to have a good pot, some money in the bank to start building a property portfolio, because it makes things a lot easier. You have choices, but given my circumstances right now, especially with what just happened with the pandemic and everything, I must admit, it's quite difficult for me. So I don't necessarily have the funds in the account right now. So I'm very keen to learn from you about using other people's money, to make the right investments. I've read somewhere, I'm fully aware about some schemes or some options that are available out there, and so I'm really keen to know more about it from you, and so that I can get on, I can start building this property portfolio, for the next 5-10 years.
Okay. And have you invested in any property education courses or anything like that?
Yes, I did. I used to go for, weekly seminars, one-day seminars, but I don't do that anymore. I do believe that I have the knowledge. I do have the knowledge. I have the experience. I know what to do when it comes to, buying a property cheaply and ripping it up, flipping it. Buying properties from auctions. I've been there. I've done it. The only thing that I don't have is the know-how about, making shrewd investments, shrewd property investments, using the right vehicles, because there's so much to learn out, there's so much to do, you can have the properties in your names, which is fair enough, but again, there's things like inheritance tax, there's taxation, there's all these things, I don't know much about that, and so I want to do it differently. The first time I did it, I did it wrong, and I'm just lucky that I've never been bankrupt. I'm lucky that I never had a property repossessed, but it was that close, so I've had to learn from my experience, and I promised myself from that experience that next time I start building a property portfolio, I'm going to do it in a very smart way, have a property portfolio that is profitable, have a property portfolio that, can enable it to have a good, living, but at the same time, looking at all the other details, like being on top of everything, the taxman, getting his, taxes, running the property portfolio business professionally,
Yeah.
So that everything is above board, everything is done, professionally.
Okay. Yeah, so I'm curious. So you said that you the first property, or one of the first properties you bought, you did it wrongly, and you made some mistakes. So I was interested in what was the mistake you made, and what did you learn from it?
The mistake I did was, it was a mortgage. It was actually a brand new flat in East London, a place called Barking. And,
Barking, yeah, I know it. Yeah,
that's right. Yeah, Wanderer Drive, I remember very well. 17 Wanderer Drive, brand new apartment from Bellway Homes. Very nice home. I had a good time there. I think I was there for about 8 years. I actually lived in the property myself.
Okay.
8 years, and I have fond memories in that property. Got married in that property, but and then yeah, I was there for 5 years, and then 2 years I did let it out. But at the time, the property market was buoyant. Property prices were going up. So maybe I can put it down to the fact that I'm a migrant. So at the time, I just come to the country, and I didn't know really the dynamics. I always thought, for some stupid reason, maybe I was naive, I thought that property prices will keep on rising every time.
Right.
So the mistake I made was to keep on remortgaging, taking money out of this.
Okay. Yes.
And what happened was that when I believe it was 2008, actually, when there was that property crash. By the time there was a crash, there was no equity in the property.
Yeah.
And it so happened that I was experiencing some marital problems, separation and all these things, and then I had to sell up, because at the time, things happened at once, like separation, and I lost my job at the same time. And before I knew it, I had this mortgage, and I didn't have, the money. I didn't, for some stupid reason, again, I didn't have, income protection, mortgage protection. So no job, no money. And the next option was to get the keys and hand them over to Halifax Bank, actually no, Bank of Scotland, Bank of Scotland. But I thought to myself, okay, no, I cannot have a bad record on my credit file. So I did whatever I had to do to sell the property. And lucky enough, I actually sold the property. I didn't make any money at all.
No.
At all, because it was, overdraw. But that was a big wake-up call for me. I thought to myself, okay, this is real. Things can go up and go down. And yes, I was naive. I can put it down to having come to the country. I didn't know how things work. So it was a big learning curve for me. And I thought to myself, okay, next time I've got to do it the right way. Well, not the right way, but I've got to be a lot smarter. Yes, I'm lucky that our paths have met, so to speak, because I've been looking for somebody like you who's, having looked at your profile, which is very impressive. This is exactly what you do, and I just need your help, really. I need your guidance and support in terms of building a profitable property portfolio.
Okay, so this one you bought a brand new flat in Barking in around what, 2000, and then you
2001 it was. Actually.
2001. You stayed there for 8 years, so 6 of those years you lived in it. 2 years you rented it out. Yes. Then in 2008 you sold it.
Yes.
Just at the in the crash.
That's right. Crash. Yeah.
And then what you sold it for, was that more or less than what you bought it for?
I think there was only £2,000 left. It was that bad,
So it's about the same. It's about the same.
And I actually got it for about 85,000. Yeah. 85,000, but I sold it for, if only I had hung on to that property, actually, in hindsight, it actually almost doubled. I sold it for about 157, something like that.
Oh, you sold it for what, 167?
157.
157. Okay, so it was much more than you bought it for.
Much more. I got it for 85,000.
The problem was because you remortgaged it, and then you had a big capital gains tax payment.
Yes. I had remortgaged. I don't know why, actually. In hindsight, I'm thinking like, how would the bank actually allow? How come they allowed me to remortgage a few, many times,
Yeah.
But I think I remortgaged twice. And at the end, I also had a secured loan with a company called Welcome Finance.
Right.
Yeah, so there was nothing left, in fact, the £2,000, I think it's, the solicitors took like 1,200 or something, so it was, it could have been a very good investment, because it did grow, there was capital growth, there was,
yeah.
But obviously, I did it the wrong way, so to speak.
So, I mean, but I'm wondering why you sold it, because maybe if you didn't really get any money from selling it, you didn't realize any cash, if you'd have kept it, wouldn't that have generated more rental income and capital growth?
Yes, in hindsight, that's
in hindsight, you wish you'd have kept it.
I wish I'd have kept it, because all I had to do, thinking about it now, that's a very good question, actually. It's one thing that I've been asking myself all these years, all I had to do was to put in other tenants. The tenants I had at the time, they were being, not paying on time. That was part of the problem as well.
Right.
And I didn't, again, I should have done my due diligence and research. I should have had, insurance to protect, just in case the tenants default or something. I didn't have that in place. I didn't even know it. Yes, I should have hung on to the property. I should have put in other tenants so that they gave me the money, and the money they gave me, I pay the lender. But also, I was under pressure from Bank of Scotland.
Okay.
Bank of Scotland. We would Welcome Finance. They're calling me this and that. I wasn't used to that. I wasn't familiar with that. Now, with the things that I know now, there's so much that you can do. You can negotiate with the lender. You can ask for time. You can go to the Citizen Advice Bureau, and they can handle, because I worked there as a volunteer for 2 years. This is like about 4 or 5 years ago as a volunteer. So I know that if somebody from the Citizen Advice Bureau calls the lender and says, listen, we've got this gentleman here, he's struggling, can you give him 6 months? Can he make minimal payments? I didn't know all these things were there at the time.
Yeah.
So I put it down to being naive. I put it down to being ignorant. But it was a big learning curve, and I believe that I'm a lot wiser now in terms of managing a property. But obviously now I need to get myself. I need to build a property portfolio, as I said before, which is profitable and do it a lot smarter.
I mean, it is always a problem remortgaging it, and that's what everyone does really. They just remortgage as much as they can, but then they get into this capital gains tax trap, which means that you were lucky you escaped that trap, but it could be at some point you could have carried on remortgaging. You could have ended up in a situation where if you sell it, you'd end up having to pay more tax than the equity released. So selling it does not release any, is actually costs money to sell it. And then you're really in a bad situation if your rental income or your income goes down, and then you're unable to finance the costs of the mortgage and so on. And that's why some people, even though they have large property portfolios, they do end up going bankrupt. So it is.
I never understand that. Why would they get bankrupt? If they've got a large.
Well, it's because of the capital gains tax. If they keep on remortgaging to the hilt, and then the capital gains tax exceeds what they get when they sell the property, so they can't raise any money. And then with all these properties, especially with what George Osborne did with Section 24. A lot of them could find that they don't make any money from their rental income every month, or
really?
Money. Yeah, and then they end up stuffed because there's nothing they can do. They don't have enough money to live on. Selling it doesn't help. So that's why you always have to just work everything out in a spreadsheet and think, rather than just always remortgage as much as possible. You have to think, is this wise, or what risk is this? And as a rule of thumb, I don't like to remortgage more than 75%. In fact, it's quite expensive to get more than 75% loan to value anyway. But you've always got to factor in how much capital gains tax will I pay, when I sell this.
Yeah, you learn something every day, and that's one thing that I'll definitely take on board next time. And also, I think I'm beginning to appreciate that the more equity you've got in the property, the better, really. As opposed to taking out money.
Well, yes and no. I mean, of course, there's goes pros and cons, because if you keep all your equity in a property, yes, it's safer, but then you're slowing down the growth of your portfolio. Because it depends what you do with the money you draw down. If you invest it wisely in more properties, you can build your portfolio, make a lot more money. But if you just spend it on stuff, your living costs, then you're ending up in a risky situation.
Yeah, that's true. That's true. Yeah, that's true.
And also, I think you bought a new flat. I think a new flat has a lower yield, probably because everyone wants new. So probably what you paid for it was maybe a bit more than if you bought. You probably ended up with a lower rental yield because it was a new flat than if you'd have bought an older flat. And also London. So I bought some property in London around the same time. And I think the growth was good in that 7-year period up until the crash. But I think the yields are lower in London.
They are lower, the rental yields are
which is why some people like to go up north to get higher yields, or so it depends what you want to do. But you also talked about flipping, didn't you? You talked about buying and flipping.
Not right now. My goal really is to have a diversified property portfolio. London, as you say, the rental yields are lower. I know properties in Newcastle, Stoke, Birmingham, Leeds. You get cheaper properties. And the rental yields are slightly better, higher. And I just want to build a property portfolio right now. And then eventually, when I'm established, I can go into property development, like buy a property at an auction, cheap price, new kitchen, new bathroom, sell it, make a quick buck. But that is like my medium term goal. My priority right now is to build, if I can have like 20 properties and then manage them well, and they don't have to be in London, they could be, it helps to have a property in London, 2 or 3 properties. But if I have 20 properties, for me right now, I'm looking, outside, London, Milton Keynes, Birmingham, all these other places. They're cheaper, and you could get a property for 60,000, 100,000.
Yeah.
They're, even if I was to struggle a bit, it's easier, I think, that if you've got a mortgage of £300, it's easier to manage than a mortgage in London, which is like for 400,000, and you have to pay £1,500. And if you've got 2 properties and you have to look for, you suddenly have to look for £3,000 at once, then it's like,
yeah, it's hard to start. It's easier to start outside London where it's cheaper. And then once property prices go up a bit, you can refinance, and then you'll have more deposit, and then you can use that to start buying in London.
Exactly. That's my I think that's the right sense of direction for me.
Yeah. And also, of course, stamp duty makes it harder as well with the higher value properties, because you have to have more money up front because you'll be in a higher stamp duty band. So
yes.
Yeah.
So so that's the way to go for me, just it's important for me to get the right properties in the right areas, spread across UK. I'm not so sure about Scotland, or let me say I'm not keen on Scotland, but within England, in England, and properties outside London. And I see also important, once I get this property portfolio, manage it well, look after the tenants, I may outsource, some of the management, because I may not live in Liverpool, for instance, but look after, be involved, get the right insurance products, to protect the rental income, get the life cover, get everything in place so that it's a well-managed property portfolio.
Yeah. Okay. So now the problem is that many people face is how to get started without a big pot of money to use as a pot. If you've got a big pot of money, it's really easy. You can just buy property. But the problem is getting started without cash. So, I mean, obviously, well, if you can find an investor who wants to work with you,
yes,
that would be that'd be a very good way, and many people do that, because obviously you do have a lot of expertise and knowledge, which an investor might not have, so that it could work quite well for an investor to work with you. And you maybe so what they could do, they could pay the deposit and stamp duty, or you could have an SPV, a special purpose vehicle. You could buy the property in that. And then you could have, say, 50% shares. You could have 50%, and the investor could have 50%. Or maybe it's better if one of you has 51% and the other 49%.
Yeah.
So you don't have to argue about
the profits.
One of 51% makes all the decisions. Or you could buy 2, one with you as the 51%, and the other one with him as, or him or her as the 51%.
Okay.
One for you, one for me. It's a good strategy. And then what happens is, so they put the money in. Suppose they've got a spare sort of £50,000. They lend the £50,000 to the company.
Yeah.
And then the company uses that money to buy property up north or Milton Keynes or something for, say, 200,000, and then 50,000 deposit, and then they give a mortgage for 150,000, and then the company, the SPV, will start over time. It will make rental income, and then at some point it will be able to refinance. So we'll start to accumulate cash over the years, and that cash, obviously, that owes the investor 50,000, so he can just take that 50,000 back repaying his loan with interest. You could pay him, say, 5% a year interest as well. So he just takes that money out. And then as soon as he's taken all that 50,000 out, then you've basically got that company is just owned by the property is owned by the company, which you own 50-50. So that works really well. And it's great for him. Because, well, it's great for you because you get property for nothing. And then it's great for him because he gets all his money out. So he actually gets an infinite return. He put 50,000 in, he's got his 50,000 out, and now he's got half a share in the company and all the profits going forward. And also, especially if you're able to get that property below market value, if you get it, like for example, if you got it at 25, supposing it was worth 200,000, but you bought it for 150,000, you'll be able to, well, after 6 months, you'll be able to refinance it for and remortgage it, value at 150,000 mortgage, so you'll be able to pay him his 50,000 back after 6 months. That'd be very attractive for the investor.
Right. Okay.
It's basically get an infinite return on investment. So that relies on finding investors, which probably means just talking to people in the property world. You know, going to network meetings, maybe putting stuff on YouTube, going to forums, and so on Facebook groups. But a lot of people do that. That could be a good way. Another way could be options. So maybe which is a form of vendor finance. So maybe the vendor is willing to. You can ask the vendor, well, why don't you? I see you want to sell this property, but or rent it out. But why don't you? How about if you rent it to me first, and then I'll buy it in a few years' time? Maybe I'll buy it in 5 years' time, and then we just agree everything now, and then I pay so much rent, and then I'll have the option to buy it in the next 5 years for 200,000. So if he signs that agreement, he gets independent legal advice. You get independent legal advice. Might cost like 1,000 or 2,000 each for the legal stuff, and then it becomes a legal contract. And then you're just renting it from him, and and then you can rent it out to tenants and make a profit on the rental income every month. And then property prices hopefully will go up in that 5-year period. So though you agree 200,000 now, at the end of 5 years, maybe it's worth 300,000. So then you can just buy it for 200,000, and then you can flip it and make £100,000 profit. So it is a lot of people. Options work really well. For in certain circumstances, for the right people. A lot of people will say no, or they say it sounds too confusing, or it sounds a bit dodgy. But you have to learn to use the right language to explain it to them. But basically, all you're doing is you're renting it and buying it later, and it can work very well for some people. Like, for example, if they're negative equity, they can't sell it now because no one would be able to afford to pay what they need. So this is a way of you basically taking over the mortgage. And for instance, in your case, you're almost at that point. I mean, you only got £1,000 for it or something when you sold your flat. So if someone had come along and said, look, why don't we do an option? I'll give you, instead of you sold it for 157, they could say, look, I'll agree to buy it for 167, but in 2 years' time. And then I'll rent it for you now, I'll pay a mortgage and everything. You would have been better off because you would have got an extra 10,000 for it. And
also I've got a property.
So it's the way, it's people in the right situation. It works really well for if it's explained in the right way. And so they're going to be open that. So options could work. And the other thing,
a quick one, please. You know, the options. You know, how do you reach out? I suppose you have to do some marketing to reach out to people like that. You know, who are in that kind of situation. So I'm just trying to find out how you could reach out to them, because it's a very good option.
There's so many different ways of doing it. Sometimes if you get, well, you're an estate agent. some of them, when you're always chatting to people who want to sell their property, you might recognize they're in a certain situation where this would work for them, where it's the situation you're in for is where they don't need to sell now. It's like maybe they're thinking, oh, maybe I'll rent it out, maybe I'm selling it, maybe I'll sell it, but they want to do one or the other. Then say, well, why not rent it and then sell it? So if they need the money now, it's not going to work. But if they're open, but for the people who don't need the money now, so, or you could either work with other estate agents, maybe if you explain to an estate agent, maybe they can find deals for you where they, they don't want to sell now. So you can the estate agents, or sometimes letting agents can find you deals, or you could send leaflets out. So that's another way, because direct to vendor, either you need an estate agent or letting agent to work for you to source them, or you need to go direct to vendor, which means leafleting, because the problem is if you're in a normal way, if you try and explain all this to an estate agent and then they try and explain it, no, they'll get lost in translation. Because they won't understand it. So it's direct to vendor is best, unless you get an estate agent or letting agent on board. And the other thing, well, sometimes people without any capital go the rent to rent route. You familiar with rent to rent?
Not familiar.
But this is when you could like rent it as from someone's wants to rent their property as a single let. Maybe it's a 5-bedroom house. You say, okay, I'll give you guaranteed rent for 3 years. I'll rent it from you for £2,000 a month. But in the agreement, you say, and the agreement allows me to sublet it to then I could rent it as an HMO, or you could rent it out as serviced accommodation. So you're paying them £2,000 a month, but if you rent it out by room, you could easily be earning £3,000 a month, or serviced accommodation, even more. So you'd have to spend more time managing it, but you could get a rental income. And some people do that, not just one property, but 5 properties, 10 properties. And then they use that to basically, first of all, replace their own income so they can give up work, and as they scale it up even more, they get more and more. And also with some of these rent to rent deals, you can also ask them at the end, oh, and would it be okay if I buy it at the end of 3 years? And then if they say yes to that, then you've got an option agreement.
Right. Okay. Interesting.
Yeah, so we better wind up. We're coming to the end of the call now, but what I'd like you to do for the next time is just to consider these different options and think which one works, these different strategies, think which one you want to, because you can't really do everything all at once. So think which one you want to focus on starting off with, and then think of that, and then maybe you can research online, look at YouTube videos or find strategies, and then think what action steps you'd have to do.
Right. Okay, these are 3 very good options. The special purpose vehicle, that's the option number 1. SPVs, you said options, and then rent to rent deals. So okay, I'm going to have a good think. Right now, if I can find an investor who's got some money and they've got a good credit history, actually that would be excellent. That would be excellent. I'm thinking about that. But let me have a good think, and yes, next time, I'll be able to tell you that, Keith, this is where, this is what I'm going for.
And also, I think it's good to, if you're presenting yourself to an investor, it's good to have some sort of track record, or to convince them that you are a good person to work with. You already said you've had this experience buying and renting this own property, but also you've written these books, and you've worked as a mortgage broker, you've worked as an estate agent, so you've got all this knowledge. So you could try and maybe document that, or maybe on a website, or on a PDF, or maybe do a video or something, just just presenting yourself, why the advantages of working with someone like you. For example, I've done a website, magneticproperty.com, and I've done a video about myself. So you can look at it as an example, and I talk about my previous experiences and how I work with the investors and so on. So you could do something similar as well. And then you could just point people to that website, or so they have a bit of background information rather than you having to explain everything every time.
That's right. Yeah, yeah. I've actually got a website. It's down at the moment. I just need to get it up and running again. But yeah, I need to make a presentation, isn't it? You know.
Yeah.
I must admit, I like your videos. You know, like I had a look at them over the weekend with Sky and you know, Jeff Randall and
yes.
You know, you've been there, you've seen it. You know, so impressive stuff. Well done, you, Keith.
No, thanks. I'm glad you like it. And actually, one of those videos, some of those videos, also about property, and one of them is about. One of them, I talked to someone who does this rent to HMO strategy. Giuseppe Leone, I think his name was. He's very successful, so you might want to look at that one as well. But anyway, so that's all for now. So we'll be in touch, and see you next time.
Thank you so much, Keith. I really appreciate it. Thank you so much for sparing your valuable time for me and providing me with this invaluable information. I'm very grateful indeed. And I look forward to speaking to you soon, you know, and have a very nice day.
Thank you.
All right. Take care, Keith.